Good morning and welcome to MRI Ascend 2021. My name's Josh Simons and thank you for joining us today for a cross-industry panel on what the future of work looks like for the property and strata industry. This morning we have a powerhouse panel joining us and I'll quickly introduce the panellists to you. First of all, we have from the occupier space, Tika Hessing, who is a human geographer and workplace strategy manager from Cushman & Wakefield. We have Nicholas Proud representing social housing. Nicholas is the CEO at Power Housing Australia and a board member and treasurer at Livable Housing Australia. From the strata industry, we have Peter Brisbane, who is the SCA New South Wales on the SCA New South Wales Board of Directors and director and licensee at Strata One. From the residential property management industry, we have Pamela Styling, who is the head of investment management and partner at Dye Jones. And last but not least, we have Dennis Coupland representing the commercial industry. Dennis is the Managing Director, Real Estate Management at Colliers International and Property Council of Australia National Education Committee and Chair. Before the pandemic, conventional wisdom said that offices were critical to productivity, culture, and winning the war for talent. Companies competed intensely for prime office space in major urban centres around the world, but with a national lockdown, the majority of us were forced to work from home full-time, drastically changing the way we perceive and use our office environments. Dennis, we'll get some insight from you on what some of the changes you've seen with regards to office usage and what strategies are commercial property managers adopting to tackle those changes.
Good morning. Thanks, Josh. Well, that's the big question, and thank you for leading with that. But really, there's so much debate going on at the moment. There's a lot of noise and a lot of discussion going on about the office of the future, the physical design, the operation of it, the technology, and on it goes. And that's influencing and changing the lives for tenants, depending on their category of industry, the size of the business, their profitability, where they want to do their work from. But property managers generally forge great reputations by adapting well to change. And this is a major change in the property management industry, clearly. So property management, asset management 101 is all about aligning life cycles. The life cycle of the plant and equipment and the structure, the life cycle of the terms of leases in the building, the expiry dates, and of course the economic cycle in terms of demand and supply. So a lot of factors, but also very importantly building relationships. So the good property managers, for them the challenge is to really understand that tenant requirement and respond to it and give the best advice they can to their client, the owner of the property. So that's the added skill that I believe property managers have to hone in on, do a lot of great research, and understand the effect this is going to have on the investment value of the property and the physical operation of the asset, and keeping those tenants happy. There's a simple formula in our world. It's called value equals benefit less the price. So to add the value to the asset, higher rents, tenants renewing leases, it's about understanding the benefits of being a tenant in that particular location and delivering that through the great service that they can offer to their tenants and their customers, their clients.
Yeah, excellent. Thanks, Dennis. And we might take a look at the tenants themselves. And Tika, what are some of the strategies you think we'll start seeing from corporate occupiers to cope with this new way of working and this new way we move forward with?
Yeah, good question. In the beginning of the pandemic, we really thought that the hub and spoke model would be the model that tenants would be looking at. So having a hub, for example, in the CBD for the main office, and then different smaller offices closer to where employees live. But now, almost a year into the pandemic, we actually see something completely different, because the importance of the office has become even greater. So we see that instead of a hub and spoke model, it's actually a hub and home model. So in the hybrid way of working, we see that people still want to maintain working flexibly, so working at home a couple of days a week. But the moment they go into the office, they want to be in close proximity to their colleagues, to their clients, because it's something rare. When you go into the office, it should be a great experience.
That human connection is certainly something that came to the fore while we were working at home for that kind of extended period of time last year. So
yeah.
There's obviously less people in the office environment. It fairly well makes sense that more people are working from home. So we might switch to the residential point of view here. And Pamela, are you seeing changes in the type of dwellings that people are looking for, that they're renting, that they're moving from and choosing to live in? And how do you expect that trend to continue over the next few years?
Yes, thanks, Josh. Yes, we are seeing quite considerable changes, in a few different ways. So we're seeing, obviously, the reliance on living near the CBD and living near work is changing. So yes, we're seeing people move away from those areas either for financial reasons, so moving to places like Ryde or out towards Castle Hill for cheaper accommodation and better quality accommodation and more space. So we're seeing families move not just for workspace at home, but also for more space at home. So because they're spending a lot more time at home and they're not sure how long that pattern will continue, so they're taking that chance and renting a lot of houses. So for instance, in places like the lower North Shore, we've actually seen a higher vacancy in a lot of one-bedroom, two-bedroom apartments, and a reduction in vacancy in houses. Serious demand for houses in all areas. The beaches, a pattern that started last year was an increase in rents for houses right at the peak of the pandemic, when people had serious financial insecurity. In some cases, they were spending the majority of their income on renting houses, and those rents were going up. And then also places like the Central Coast saw a massive increase in rental return.
Yeah, so you guys cover quite a wide geography. So you've got here in Sydney, so you've got a fairly balanced view of that. What about lifestyle locations? So I know you guys have an office in the prized Southern Highlands down in Bowral. And it was very well documented through the pandemic that people were certainly moving away to those regional places. Did you see that impact play out?
There were two things there. So right in the peak of the pandemic, obviously, we have a short-term accommodation business down there, or that we're growing at the moment. Obviously, that was greatly affected right in the middle of the pandemic. But now we are seeing bigger houses being rented by people from Sydney that only need to attend the workplace 1 or 2 times a week. They're moving to the Southern Highlands. And again, because we can't travel internationally, we're seeing a massive return of the short-term market there.
Yeah. And Peter, in the strata space, with more people working from home now, how have you seen, has there been an impact that you've seen play out in the last 12 months, and how do you see that trend continuing?
Thanks, Josh. Firstly, what COVID did was emphasise cleaning and maintenance within buildings. So what that brought was ability for owners' corporations to review their cleaning process and looked at, for example, everyone being at home. One of the issues we had was boxes from people buying items online. So those systems had been automated. So in time, we've come to a position where we're fine-tuned. So people working from home with the rollout of NBN, it's also helped with technology within people's homes, I should say. So what we're seeing now is a more automated process in how people communicate. Also, we're also seeing a trend where owners are looking after their neighbours now, and that'd been a flow-on effect from COVID.
Yeah, sure. And in those buildings where you've got kind of those shared facilities, did you guys, through that lockdown, see a spike in use in those kind of recreational facilities as and when COVID permitted?
Well, yes, we did. Originally, it was gyms, those co-share arrangement areas where people couldn't go to a gym, so they assumed they could use their gym within their home. So that was an interesting process for us. Now, as I said, everyone is back to what we call the new normal. and we now have that ability to get back and use those shared services, the pools, the gyms and so forth. So it's actually, the synergies there really working well with people from home, working from home, because we've gone through that area of we had to work together and we had to find a happy medium on how everyone could coexist. So we're now in a position where I can only talk from our perspective as within the industry and within my own business, that strata is an advantage for people to live in. You don't have to worry about the maintenance. We do that for them. So we're finding that it's a plus to live in a unit. Whereas interesting, the fact about the trend of people moving across to Torrens properties, I could see that need to, if you've got that growing family, you'd want to move into a property. But we're finding trends in our key areas, the Northern Beaches, an area where growth in that market is coming to play.
Yeah, excellent. And Nicholas, what about the community housing market? I mean, we've heard from Pamela about what she saw and Peter what he saw in that traditional residential property management space and tenant market. More broadly though, how have you seen that play out in the social housing industry?
Thank you. We've seen an extraordinary change in homes, housing, and what we see as our place of where we go to rest, where we go to do things with the kids. Everything we do in that place has changed in the last 12 months. It's become a workplace. So the 9 to 5 environment that we might have thought we were in before is now 24/7. I think we all understand what that means. What we saw, we've got about 125,000 tenants in about 73,000 homes right across the length and breadth of the country, and we saw that they coped pretty well. They managed to pay the rent, pay the arrears, pay any debts. The job seeker payments were certainly helpful there. But what we're seeing now is far more interesting in the sense of we are seeing double-digit growth in house prices across the country. We're seeing in places like Gladstone, your vacancy rates as of February over a 12-month period, you're seeing going from a 6.9% vacancy in February 2020 down to about 4% now. You're seeing in that place, you're also seeing a 16% annualised rise in the value of a property, off a low base, of course. So when you start thinking about what those double-digit numbers mean, you can start seeing other things start to happen. The latest building approval numbers are showing a massive flow through of new homes, which is important because the house prices are going up. Had we not had a home builder, we might not have seen that flow of new housing. So prices are going up and we've got above long-term average new homes coming in. So what's happening? Is it the expats coming back? That was the last thing that people were thinking it might be. But there's no visa classes coming in, so there's this uncertainty. There is a potential bubble in activity that's happening right now. We'll see how that plays out, and then maybe we're bringing forward the demand and maybe we're seeing how that is. And there is a foreign component which we just haven't become aware of, how much of the foreign investment is coming in right now, like it did about 5 years ago, which saw a massive spike in activity. But in terms of the bottom line, it's affordability. And affordability right now, if it was tough a year ago, it's worse now.
Yeah, sure. Before the crisis, the real estate industry had been moving towards digitising processes, creating digitally enabled services for clients and tenants. However, practically overnight, physical distancing, lockdown of physical spaces magnified the importance of this digitisation. And some people have said technology adoption has jumped forward by 5 years or more. Starting with Tika, what impact do you see the digital leap we've taken over the past 12 months having on workplace technology for the next few years, and what do you expect we'll see after this?
Yeah, so two things. There is one trend that's happening that we kind of all expect, and then there is another trend that I see happening that I think we need to take into consideration. So first of all, of course, the technology to have online meetings, have the right meeting room, AV, but also the acoustics of meeting rooms needs to be right to create an immersive meeting room experience and a hybrid meeting experience. So if you, as the only person of the team, are joining in online, you want to feel included, so you need to have the right cameras that can actually zoom in, and the right sound. And often our meeting rooms are not built for sound from the speakers. So that needs to be increased, and that's something we all expected. But then there are a couple of other things happening. Early on in the pandemic, some technology that we saw was, for example, temperature checks. Well, a couple of years ago, I did a presentation, I think it was in 2018, and I said, in the future, in 2040, we will walk into a building and cameras will discreetly recognize us. The security gates will open and you will be checked whether you are carrying a virus with you. And the audience laughed and they thought this is crazy. But now a number of these things are getting implemented. So we see temperature checks is completely normal. The scanning of your face or fingerprints is also something that we see more often because it is a touchless technology and it's also seamless and easy to use. And then another thing around surveillance is monitoring when people are working from home. So as a manager, it's hard to know how your people are experiencing their home office environment. So how can we know how they feel? When you look at the Fitbit industry and the wearable devices, a lot of people are interested in monitoring their well-being. So what we could potentially do is using those wearable devices to understand how people are doing and then to improve their overall experience. I'm not saying whether this is good or bad, but I'm saying we need to look at it because companies are investing in these type of technologies and we need to understand the ethical and privacy implications of that.
Sure. And Dennis, how have you seen this technology adoption either leap forward, or what impacts have you seen over the last 12 months?
Well, I think with the technology comes the crime, and I see cyber crime and cyber technology as a major issue for property managers to understand. Increasingly, tenants, when they're negotiating with landlords, are asking the question, what is the protection that I get in your building from all of my systems and technologies? There are some horror stories from overseas about hackers taking control of buildings, turning off systems, turning off security, turning off air conditioning, and then saying, if I don't get that check in the bank by 5 o'clock, your building won't be functioning in the morning. And landlords have actually paid up. It's quite an amazing story. But even in what we might think are simpler applications here, in some of the high-tech logistics assets, the racking, the robotics that goes with the delivery of goods into trucks that get delivered to supermarkets, you can just imagine the downstream effect of disruption in those supply chains. And what that means is property managers have to have a very good understanding of actually who owns the equipment, who owns the technology, and whose responsibility is it to maintain it and protect it. So it's a big issue, and it's a bit like Y2K, I think, for property managers all over again from a technology aspect, but cybersecurity, a big red flag for us.
Yeah, interesting. And I mean, interesting that you also just spoke about, the whole logistics and delivery chain and things like that. And we heard Peter before speak about that from the end user and obviously how this all ties together across the varying sectors and industries. And Pam, I know you guys are always on a very clear strategy forward from a technology perspective. And obviously the last 12 months have been, have potentially changed that. And how have you seen that change, and how do you see it moving forward?
Yeah, I would have said just over a year ago we were very well placed and innovative in the technology space, and then going into COVID and coming out the other side, we realised that the technology that we'd partnered with and the type of businesses we'd partnered with weren't going to get us to where we needed to go as quickly as we needed to go with the changes. So, for instance, we were with more nimble, smaller startup type technology that allowed us to tailor our products to, their businesses to our products. And we've now taken the slant that we need to go with, work with bigger businesses that have the financial, they have the finances to develop the products quickly enough to meet the market so that we stay relevant.
Yeah, absolutely. And Peter, how about for you? I mean, the strata industry has, certainly started that evolution from a technology perspective. I don't think there's any questions about that. But have you seen a dramatic impact or change over the last 12 months? And do you see some big things coming up in the future for the strata industry?
Firstly, I've been a strong advocate of technology within our space for a long time. And we've been utilising Rockend product, Meeting Wizard, for our managers, so they've been able to undertake Zoom meetings at strata meetings for a long period of time. So I thought I was adept when it come to COVID, but we hadn't implemented all those other areas of managing the team at home. So whilst I thought we were ahead of the curve, we were actually there was a lot of hurdles we still had to face that we hadn't experienced. So it has been positive for us. Come out the other side now. Greater communication within the team. We have our own internal application we use for communication. We also have an external social. So we use another platform for social communication. So if you want to touch base, if someone wants to have drinks, or if someone has a problem, or if someone's running late, it doesn't have to congest our general communication platform that we have for business. So it's been positive. What I have seen value in is the reduction of on-site meetings. We don't personally do it, but there are within the industry, people have their strata meeting in their car park at home. I don't know why you'd want to see a professional in a car park, but it's comfortable for them. And at the end of the day, we're a service-based industry, so we have to meet the requirements of what the client is looking for. But what we've found is the adoption of Zoom as an example, it's become more mainstream. Those that are tech savvy have found that they're talking to their parents via Zoom, or they're talking to their grandchildren. So now the ability to use that software has been great for us. Generally, strata meetings are held between 4 and 6 p.m. of an afternoon, which in Sydney is peak traffic time. So having the ability for our team to do Zoom meetings, and not only in service provided in their office, but also at home, creates that element of personal touch as well, I believe. So it's been a positive.
Yeah, brilliant. And Nicholas, how about from the social housing side of things? Have you seen a significant change in technology during this time, or were you already on a trajectory that you stayed on, or have you changed, and what do you see moving forward?
Look, I'm thinking back to 2019, we had a conference in Canberra. We had about 400 people when you could all get together like this in a virtual or real space. It's a contrast, of course, so we've all adapted to where we are today. But thinking back to that time, we had a theme which was power housing, CHBs, building resilient Australian communities. And I remember we're talking about the theme, and why resilient? It's like, well, because there's things around in the future that we haven't seen. There are lessons to be learned from that. So we focused that conference in late 2019 on that theme. We have been on a trajectory of adapting to change over a long period of time. Working with technology has been a big partner in that. And for us, we were working closely with Carlston and MRI today about what that might look like, working with others such as content security to look at the cyber security, looking at the posture that we have as organisations, because the threats are very real, as Dennis says. The chance that you'll be here one day and gone the next is real. And so working with technology is a must. And for us, working around that, we've seen that we've been preparing for something like a COVID environment. We have 125,000 tenants, and we have services that wrap around those people. We have support around how we manage their tenancies in a way that is a little bit deeper than the mum and dad investor. So we have to think a bit more about it. And so going into a lockdown period, we had to have technology at our fingertips to be able to understand how that home would cope in such a situation. What's the requirement around the maintenance at that point in time? How is that tenant going to cope physically and mentally in an environment that all of us were starting to wade our way through, something we'd never done before. So I can only commend the technology that we were using at the time. The majority of our members do use that MRI product, which has been fantastic for us to have been on that trajectory on the way through. What we've learned through that is that we need to keep adapting to change, though. And I think that's the thing where we're shaping up for quite a lot of things with our partners that we work with, and particularly that MRI feature and suite that we can access.
Yeah, excellent. I think that obviously it's fairly consistent there across the board from everyone around that very swift change in technology, and probably one of the other really significant swift changes that we saw, if we wind the clock back 12 months, was the government response. Retail spaces emptied, businesses, a lot of businesses probably laid off staff, if we think aviation, tourism, all those type of things, and we saw unemployment increase, overnight and dramatically. Leading the government response with JobKeeper and JobSeeker payments, along with a wide variety of legislation regarding tenant evictions, rent reductions, and more across the property industry. We saw moratoriums on both the commercial side and the residential side. And Nicholas, there were a lot of changes that all were made in very quick succession during a time of significant hardship. And at the time, we probably didn't necessarily understand the long-term impacts of those decisions that were being made and the changes that were being made. There was obviously a lot of commentary about their immediate impact, but what I'd love to know today is how you see the changes impacting the property industry moving forward, particularly in the social housing industry. And do you expect more changes? And more importantly, do you think there should be more changes?
Yeah, going back to the government response, I think we've seen, of all of the countries in the world, we have been one of those that have done a pretty good job of it. We've seen that the stabilisation of housing in Australia was one of the key pillars of tackling COVID as a country, and I think we did pretty well. Where we're going in the future, though, as I've mentioned before, is around affordability, and the challenges we faced prior to 2020 were there. There were significant waiting lists for social housing. There is a situation where people that are trying to work close to their jobs in a place such as Sydney or Melbourne, in those large metropolitans, trying to find where that they can live close and not do the commute. And now we're seeing this change to people being able to possibly work from home and work from, not have to go that hour and a half commute. So it's going to be really interesting to see how that plays out. But those cleaners still have to go the same distance. They haven't changed their proximity to their workplace. That doesn't change for a lot of the people that are tenants, particularly affordable housing. A lot of those key workers haven't changed their movements. And so this is an interesting thing. They have additional costs that other people aren't facing at the moment. That'll be interesting. But what I'm really fascinated to see, and what will play out the next 12 months, particularly with an election coming on, is how Australia copes with an increase in house prices when wages aren't going up by that much. The certainty around the wage environment is not there. We'll see how that does play out. And I think the thing for governments is going to be, how do they tackle that issue? For us, we see there's opportunities because a lot of people want to invest in what we do. We see that there is an opportunity for international investors. Before the pandemic, we were in the States, in the UK, and talking to a lot of big investors, the Ford Foundation, Chan Zuckerberg, about what they could do in Australia. Morgan Stanley, very keen to be investing and putting ESG funds into Australia. So for our group and in the affordable housing space, working with governments to see that hand on the shoulder, that support, we'll see a structured equity platform in Australia where a 4% yield, guaranteed through pandemics, through ups and downs of the economic cycle, is available. And that's where super funds and diversification of investment will see affordable housing in 2 or 3 years' time, I believe, have a platform and an asset class for investment, which is exciting for us.
Yeah, absolutely. I think that's certainly a positive outcome of what we've been through, and if that plays out like that, I think that'd be great for the social housing sector. And Dennis, obviously, there's no shortage of conversation around retail spaces and commercial spaces and landlords in those areas suffering. How have you seen the government response, and how do you see it playing out? Do you think things should have been done differently, and should there be other changes moving forward?
No, I think it was all done superbly well, to be honest. If you cast your mind back to just over 12 months ago, we were all locked out, and we were in a world of fear and uncertainty and the unknown. And the property industry, it's the biggest industry in the world if you consider it in that scope. But here in Australia, it's a very mature industry from a communication and operations point of view. And thinking back to those discussions with the Prime Minister and Cabinet, with groups like Property Council, who showed a lot of leadership, mobilising their membership base, and those major institutions and owners of property that represent the investments of a lot of superannuants did a superb job responding and really getting that code of behaviour, which was really stage 2 of what we went through with the Retail Leases Act in some respect. But I think it just demonstrated that the industry could work together to get some great outcomes. It wasn't easy. It had to happen very quickly to get some certainty moving forward and protection for all of the stakeholders. And I think that's something we can all look back on with a lot of pride. And I think that industry bodies, as I said, like Property Council, showed a lot of leadership, bringing industry groups together. And as it's played out, I think the government handled that really well.
Yeah, excellent. And Tika, from this perspective, the government response and things like that in the occupier space with tenants, how did you see the impact, and you know, what have you seen coming out of it?
Well, I completely agree with Dennis' comments first. And for tenants, so our lease agents and brokers, they helped our clients by getting those lease or the rent releases going, and that was really good from a tenant perspective. Lots of flexibility. The landlord-tenant conversations have, for the most part, been two ways. So tenants have seen the relationship with the landlords increased. However, not for all landlords is the same story, because smaller landlords had a lot of difficulty by giving the tenants so much rent release, because the landlords were actually one of the only parts of the industries in Australia that had to give rent release. Yeah.
Yeah, and Pam, we saw that in the residential space as well. I mean, we saw moratoriums and legislation to support that, and I think property managers across Australia had never renegotiated so many rents in such a short time. And how did you view the government response from the residential space? And obviously we're now coming out of that; those moratoriums are ended, and how are you seeing that impact as well?
Look, initially there was quite a lot of fear around it. I do think it was handled appropriately. I think JobKeeper and JobSeeker and those types of payments did buffer the effect on landlords considerably. I think the biggest issue was the opportunistic tenant, which those that put a lot of pressure on our internal teams to handle those types of tenants without the ability to evict them, which they usually would have to support a landlord. That was removed. I've had cases where I've had to handle them myself because, and it took 5-6 tribunal cases, even when the tenants were over $30,000 in arrears, had absolutely no intention of paying and were still working.
Yeah.
So, even though, the issue was high income earners, so you had people earning $300,000 that did drop their income by 30% or more, but were still capable of paying a rent, that were still protected. Those types of instances, which the Lower North Shore and the beaches, there were quite a few of those types of professional tenants that it didn't properly support the landlords. But for the most part, I do think it was handled correctly. I think it has caused fear for a landlord now, or for a lot of landlords, and now that the market's been so strong for the last quarter, I think it's resulted in areas where that might have happened more so than others, and that it's now caused landlords to leave those markets where the returns are not improving. So again, Lower North Shore, which we have a big portfolio there, so I can speak to that area specifically, where the returns are not as good as they used to be. They might still be down 10% on certain types of properties. The landlords are taking advantage of a great market and maybe putting their investment into areas like the beaches, where they're getting a better return and good growth.
Yeah, certainly. I know in Victoria there's probably, in a similar vein, obviously a very strong sales market, and as we know, the Victorian government's brought in probably the toughest property compliance legislation in the country that is driving a lot of investors to take the opportunity to get rid of the property, and it'll be interesting to see how that plays out from a supply and demand perspective, because you're getting rid of properties, and quite potentially those laws that were designed to protect tenants will result in increased rents due to supply and demand. So in a similar way. And what about the landlord? How did you see the impact? Tika obviously mentioned the smaller landlords in the commercial space felt the pain. Did you see that in the residential space?
Look, I think initially what I thought would be the effect, it wasn't as bad as we thought. So across our portfolio of over 5,000, we probably only had 120 actual affected rents. Those are now all corrected. Very few, only the commercial properties that we have that are still paying back rents, or maybe businesses that are still affected. But the residential side, it's back to normal.
Okay, recovered well. And Peter, how about in the strata space, the government response? I mean, you mentioned before about those shared facilities, and people obviously thinking, well, if I can't go to my normal gym down the road, I'll start using those shared facilities and things like that. And obviously, income's dropping, and there's strata levies and things like that. Did you see an impact in the strata space?
We did, mindful of the other side of the fence to Pamela. Owners Corporation, through sound management practices, had that buffer of money there. So they were in a position where they could ride out the storm, so to speak. So that was one positive. What we did have to do was be mindful of our clients that were investors that didn't have the ability to pay levies. So through communication with the Owners Corporation, we're able to establish methods to manage those clients. Predominantly our portfolio at Strata 1 is Lower North Shore, Northern Beaches. Those areas held well within the pandemic, so we're in a positive position. That said, I think how the government managed the whole process was a positive from Strata's perspective. Where we are opposed to other countries around the world, I'm quite proud to be an Australian.
Yeah, absolutely. And as we wrap up, just some final thoughts from each of you on anything that we haven't covered that you see as critical to how we see the workplace changing, or the market and sector you operate in changing. And Dennis, we'll start with you to wrap up and some final thoughts.
I think we have to be mindful of all those great teams of people that we've had out in, for example, the shopping centre portfolios that are dealing with a huge stress every day, with dealing with the public at large, dealing with tenants, dealing with contractors, and dealing with owners non-stop. And as we all know, in the world of managing shopping centres, there's anything can walk through the door at any time. So we are very much of the mindset of supporting our great people out there with all of the work around developing careers, keeping their well-being in check, and just supporting them and keeping them close. That's been a major factor. And I think also in terms of the commercial factors of the effect of less cash flow in buildings, what does that do to fees and the overall well-being of your business financially? I've got to say the support we've had from owners and the understanding that they now have of just how hard property managers have worked through this period to keep their assets safe and keep their investments in check. Very, very minimal, absolutely minimal fee erosion from that respect. And that's up to the property managers, of course, telling them and demonstrating the extra work that they're doing to meet all of these requirements. But I think as a whole, I think the property management industry and the technology and everything that supports it can be very well satisfied and quite proud of the way they've come through this process. And there are some outstanding careers that have been developed that I see in our teams and across the whole gamut of the industry. Just better knowledge, better understanding, better business decisions, better care of colleagues and people. And I think there'll be some good legacy to come through out of all of this.
Yeah, that's certainly the people have come to the to the forefront through this in every industry, across all of our client bases we speak to. It's certainly something that's prominent. Those sentiments are echoed, which I think is really important. And Pam, from you, as a wrap up and some final thoughts.
Yeah, I think from the residential side, this has provided an exciting opportunity for us to look at changing our business model. So one that is less reliant on a management fee commission and more reliant on multiple streams of revenue, that potentially changing roles from properties under management to ones that are directly related to a revenue tally or a revenue total per annum per pod, so that the value of work changes and the type of work that a property manager does changes into a better career for them over time, one that's not just a repairs and maintenance and arrears type of role, to one that is purely driven by wealth creation and creating wealth for clients over time. And I think with the way that technology is moving and stripping out all of those administration type roles, that is where the business needs to move. So it's good timing. Yeah,
absolutely. One point I will just make about a comment Dennis made about the average management fee not dropping in the commercial space. Certainly, I think the exact opposite has happened in the residential space, and we're not talking considerable numbers as a percentage. I think when we last looked at the data, it's about 0.27%. But when you extrapolate that out across an average weekly rent and 2.4 million properties, professionally managed properties or thereabout across Australia, it's significant. Pam, have you seen, you've obviously alluded to the changing business model and a less of a reliance on that management fee?
I think in the future that management fee will not be the major way we take income from clients or that we produce revenue for a business. I think the whole model needs to shift. I think the only way clients are going to see value in a professional property management firm in the future is if we can genuinely create wealth for them rather than just do administration tasks, which is where the historically where the model came from.
Yeah, absolutely. And Peter, some final thoughts from your lens of the market and the strata space and what you see moving forward?
Interesting what you say, Pamela. Our industry is similar. We both look after the same client. I find that with technology, it comes an expectation that our fees should reduce as well. But when our fees haven't been at a high standpoint originally, as you do in commercial, we're in a situation where we're between a rock and a hard place. A positive that's flowed on from this position for us as an industry has been our professional standards scheme. So the government has acknowledged that a higher level of professionalism is required within the strata sector, and a greater understanding of those that live in strata community what it actually is. So we've found with the government coming on board and assisting us with that means a strata manager getting the level of acknowledgement that they should get for what they've been doing behind the scenes, because it's like as the analogy of an iceberg, what client sees above the water is a small portion of what a strata manager actually does below the water. So I see that as a positive from out of a bad situation we've experienced.
Yeah, absolutely. And Nicholas, from the social housing industry, some final thoughts from you and a bit of a wrap up. And
yeah, certainly we've seen great innovation in the last 12 months have to come to the forefront, working with maintenance schedules that don't stop. Rust doesn't sleep, as someone once said, and so our homes are always needing attention. Everyone's homes in Australia do, and so the technology around facilitating that maintenance, and so taking it from a phone call through to a payment. Now we're in that space where a couple of years ago and prior to COVID we had to do probably 10 steps. Now it's just the phone call and payment. Everything from satisfaction, having a check that it's been done, that the glass has been repaired, all those systemic process requirements have now been innovated in one of our partners that's working. It's Property Safe, and that's been a trial we've done, which is looking quite good. But this is a bigger problem for Australia. We have about 10 million homes, and a lot of them aren't universally designed, so they're not cradle to grave type homes that you can have an injury and know you're going to get around that dwelling and not trip over steps and everything else that you know, they're built 40, 50 years ago for a different audience. And so we also, the energy requirements, we're seeing this zero net emissions, you know, these targets, the topic of the day in the newspaper today, actually. So, you know, we see that the landscape around us and the geographies and the homes that we're going to be living in will have to change. We'll have to look at hard questions. I mean, we look at Property Council talking about home builder and how we've seen this great momentum in housing at the moment, but there is no land. And so where do we find that land? We keep pushing it out further. That might be possible with technology. So that's one little ray of light that comes through that allows that. But realistically, repurposing a lot of homes in the near future is going to be a hard consideration that governments need to. And to renew some stock that's been around for 50 years, that's past its use-by date, it's not functional. And I think that's a great opportunity to see communities become revitalised. And that's an area where, in social housing and affordable housing in particular, we'll see state governments, particularly as they're doing in Victoria with the $5.3 billion stimulus that they're doing, is continue those jobs, continue that economic activity, but create new communities for the future. And I think that's quite an optimistic place to be.
Yeah, absolutely. And Tika, from your perspective, the human side of the equation that you've brought to the conversation, what are your final thoughts and some forward-thinking ideas that you see coming at us?
So when we are looking at the future of work, I think for organizations in Australia and across the globe, really, now is the time to reimagine what the best way of working is for your particular organization. So, you know, there is no one-size-fits-all strategy. And I think the strategy should be human and planet-centered. So you often hear about human-centered design, but I think we should add the planet as well. So when we talk about human-centered design, it's co-creating the ways forward for your organization, talking to all levels of the organization, people of all levels of the organization. How do you work best? What do you need to excel in your job? And creating that way forward. And from a planet perspective, I think COVID has really been a wake-up call. COVID is not the same as a climate crisis, but it has a similar effect. So, you know, the whole world shut down, and similar things can happen with a climate event. So I think this is a wake-up call for us to include the planet in our ways of working going forward.
Yeah, absolutely. Thank you to each and every one of the panellists for joining us this morning. There's been some absolutely brilliant insight that has been brought to the conversation. This is a very first cross-industry panel, and I hope that it has delivered some great thoughts and provoked some ideas for each of you out there to move forward in your respective businesses and industries.